All right. Good evening, everyone. Welcome to Scholars and Associates. Tonight, we'll be looking at the bank reconciliation statement. Bank reconciliation statement. One of the key topics under the fundamentals of accounting. So, bank reconciliation statement. Bank reconciliation statement. All right. So that is the BRS, right? So we said that under the bank reconciliation statement, we will be preparing two key accounts. We look at that, which is the adjusted cash book, and then the bank reconciliation statement. These are the two key requirements that will be prepared. So here they will give you under the adjusted cash book, you'll be given a cash book so that you adjust it. Under the bank reconciliation statement, that one you'll be given a bank statement for you to adjust it. So we are adjusting these two accounts, right? And I believe we already know our cash book format as the debit side and then the credit side, right? And we know that cash book is an asset because the cash book is made up of cash and bank transactions. So that it increases at the debit side and then decreases at the credit side. And we know the debit side is also the payment side, right? The debit side is the receipt side, that is the receipt side. And the credit side is the payment side. So that is the cash book for you. And then we moved to talk about the bank statement, the bank reconciliation statement. So the bank reconciliation statement, we said we start with the balance as per cash book. Balance as per the cash book. So the balance as per the cash book, and then any unpresented checks will be added, right? And we give the meaning of unpresented checks, unpresented checks. Unpresented checks. Any unpresented checks should also be added. The unpresented check, we can have an unpresented check for Kofi, unpresented checks for Kofi. We can have unpresented checks for Kofi. And then we can have unpresented checks for Amma. So the two will give us the total unpresented checks. The two will give us the total unpresented checks. The two will give us the total unpresented checks. So now, then we said that we less are uncredited checks. So unpresented checks, we said that they are the checks that the business has issued to its suppliers. So the business has paid the suppliers by check, but the suppliers have not presented it to the to the bank for payment. They have not presented it to the what? To the bank for payment. So that is unpresented checks. So it's like those suppliers whom the business is owing, they have the checks with them, but they've not presented the checks to the bank to cash out the money. So that is what is known as what unpresented checks. Then we have the uncredited checks where the checks have been presented to the bank, but the bank has not yet credited the account of those suppliers, right? So the uncredited checks, they have the checks, but they are yet to credit the account. So that is the uncredited checks. The uncredited checks, I have uncredited check for Kujo, uncredited check for Kujo. And then we have uncredited checks for EC, right? Uncredited check for EC. So the total will give us the total of uncredited checks, but we are to less it, right? We are to less it. We are to less it. So if you add this unpresented to this, and you get the totals here, this total you are less all the uncredited checks. So it is uncredited checks. Uncredited checks. So if you less the uncredited checks, then whatever you have becomes your balance as per what bank statement. So you see that in the bank statement question that you'll be getting, the balance that you get here, the final answer that you get here should be in the question, should be the same amount that you were given in the question. In the question, you'll be seeing the balance as per the bank statement. So that, let's say in the question, the balance as per the bank statement is 2,000. So here to be what? 2,000. Right? So it should be 2,000. Then you know that whatever you are doing is correct. But if it is not the same amount as whatever you're doing, means there's an error somewhere. So this is the normal general format of the bank statement, bank reconciliation statement, and also the cash book, right? So the cash book, any item that would increase, yes, and then item that would decrease, right? So we are adjusting. Sometimes you can see that the whole rationale behind the bank reconciliation statement is that we, the business, we are having a bank account, right? Every business has a bank account with a bank. So if we, in our books is what is known as the cash book. In our cash book, when we make payments, we record it at the credit side, right? But the payment side is at the credit side. Also, if we receive any cash or check, we also record it at our debit side, receipt. So it is a double entry, right? So if we credit it, if we make payment and we credit in our books, we the business, and the bank statement would also debit. It is a debit credit affair. So if we credit in our books, when we make payment, in the bank, they would debit when they make payment. So that is a double entry, debit and credit. On the other hand, if we receive a check and we debit our cash book, the bank would credit their account. We will credit our account, right? So it is when we debit in our cash book, they would credit. So that is the debit credit. So that's the rationale. So we want to make sure that the balance that we are having in our cash book is the same as the balance that the bank is having, right? So if we are having 2,000 in our cash book, the bank should also have that 2,000. Our bank statement should also have that 2,000, because you can see that at the end of each month the bank will send you your bank statement, right? Even normal individuals, you can see that if you have an account with the bank, on a monthly basis or maybe quarterly basis, they can just give you your bank statement so that you know the transactions that occurred on your bank account. Yes. So we want to make sure that the final balance in our bank statement tallies with the balance on the cash book, right? Tallies with the amount on the cash book. So that is the rationale behind the whole reconciliation thing. We want to reconcile the cash book and the bank statements to ensure that this thing is very important, and it's very practical. At my workplace, we usually do bank reconciliation statements, yes, to ensure that the balance, um, the business balance, tallies with the bank statements, right? So we do that a lot. It's very important, very practical. So we can see that. Let me introduce this thing. Sometimes you can also have errors. You can also have what? Errors. So I'll make it simple by saying that all the errors that increase our bank statement, errors that increase our bank account and our bank statement would be added to the unpresented checks, right? And then errors that let me come down. And then I will also say errors that decreases
How do you know?
that decreases
Safe. Last time I heard it was 3.
bank statement.
Safe.
Our bank statement
Oh,
would also be added to the what? Uncredited checks and then deducted from, will be added to the uncredited checks and then deducted from the total, right? So and then deducted from the 2,000. So that is the whole thing about the whole thing about the bank reconciliation or the bank statement format, right? So the last time we look at this, and the format, this is the general format, but there are some instances, depending on the question, we can rather add the uncredited checks instead of deducting the uncredited checks. Depending on the question, we can rather add uncredited checks and then deduct unpresented checks. So let me also give that format. So this is one of the formats. I mean, talking about the bank reconciliation statement, this is one of the formats. Another form, this is format 1, right? I mean, talking just about the bank reconciliation statement, format 1. So format 2, I mean, with the same BRS, I can say that balance as per bank statement. Look at this. You see, when you check the first format, I started with what? Balance as per the cash book, right? So you see that after preparation of the cash book is having a debit balance. It's an asset, right? So the bid balance brought down would always be at the what? At the debit side. So balance brought down. But before there will be a brought down on the debit side, there should be a carried down. A CD at what? At the credit side. So the CD will come to the credit side, then the brought down is at the debit side. This brought down would begin the balance as per the cash book. So the balance as per the cash book is this balance brought down that we are seeing. Is this balance brought down that we are seeing. This, so that's what we use to start our bank reconciliations. So balance as per the cash book that we have adjusted. So this is it. If it is 2,000, it means this place will also be about 2,000. If it's 2,000, I mean this place will also be 2,000. So that is the first format that I'm talking about, right? Okay. So now the second format. The second format, I'm not starting with balance as per cash book. I'm starting with the down rather. Balance as per the bank statement. I'm starting with this one rather. So look how the format will be. Look how the format will be. Balance as per the bank statement. So now the balance as per the bank statement. I'm not starting with this. Add what? What do you think we'll add? Who can tell me? What do you think we'll add? Balance as per bank statement. We are starting with balance as per the bank statement. What do you think we'll add?
You add uncredited checks.
If I meet one teacher, I'm not the child.
Sorry?
I don't go to class management cases. Oh God, it's like
Please increase. I can't hear you. Speak loud, right?
You add uncredited checks.
Yes, please. I can't hear you.
Okay.
Add
You
uncredited checks. You see the first one we added. Exactly.
So it looks like I don't go to class.
Exactly. We add uncredited checks. Because the first one. Hey, Lydia. Lydia, are you with us?
So you're adding.
Right. Okay. So we are adding uncredited checks. We are adding uncredited checks. So uncredited checks. Uncredited checks. So this one can be Kojo, AC, right? Kojo AC, right? Uh-huh. So now, which of the errors will come here? Which of the errors do you think will come here?
Wrong debit.
Yes, which of the errors?
Errors that increase our bank statement.
Wrong debit.
Error that what?
Increase our bank statement.
What is wrong
Error
debit? What is the meaning of wrong debit?
that increases our bank statement.
Yes. Errors that increases our bank statements. Is that true?
Yes.
Yes. Is that true? Errors that increases our bank statements will come here. Okay. Don't you think it will be error that decrease our bank statement rather? Don't you think it's error that decrease our bank statements rather? Yeah, so errors that decreases our bank statement. Error that decreases our bank statement. Error that decreases our bank statement. Right? So then, so someone said wrong debit, or is it wrong debit or wrong credit?
Wrong debit.
Wrong debit. So what is the meaning of wrong debit? What's the meaning of wrong debit? Yes, what's the meaning of wrong debit? When you debit bank statement, what does it mean? When you debit a bank account, what does it mean? Means you are decreasing the amount, right? You are decreasing the amount. But when you credit the bank statement, it means you are increasing the amount. That's what they say. Your account has been credited. It means that you have increased your amount. Your account has been debited. Debit means you have reduced your amount at the bank statement side. But if at the cash book side, debit means you are increasing the what? The balance. The balance, right? You are increasing the cash book. But then credit means you are decreasing the what? Cash book balance. So if wrong debit is coming, it means error that decrease our bank account, right? Because we are just turning down this. Look, we are just turning down this. Now we are starting with the bank statement. So all these things must what affect the bank statement. I don't know if you get it. Do you get it? Hello, do you get it? Can you hear me?
Yes, yes, we do.
Okay. So now, so let's continue. Let's continue. All right. So now, error that decrease our bank statement is this, and we add it. If we add it, that'll give us the total. Then we less unpresented or checks. Unpresented checks. So Kofi, Ama, Kofi and Ama. So, and then if there is errors that increase our bank statement. Error that increase our bank statement. So that is basically the wrong credit, as someone might say. Wrong credit means we are increasing the bank statement. And this one is also wrong what? Debit. Wrong debit. Wrong debit and then wrong credit. Okay. So what then is the total? We get a total balance. Total balance. Total balance. And what is the name given to the total balance? Balance as per what? What's the name given to the total balance? Hello, what the name given to the total balance? The balance left. Yes, the one whose hand is up. The one whose hand is up. What's the name for the total balance? Hey, you don't know the name for the total balance. Alright, so that is the cash book. Because we are turning it upside down. If you start with this, right? So balance as per the bank statement, add uncredited checks, less unpresented checks, right? We also have another format. So let's look at the format 3. Format 3. The format 3 is saying that I want you to look at the format before we continue. So that you understand. So that if any question you get under bank reconciliation, you have to kill it. Because bank reconciliation statement is a bonus topic. It's a bonus topic. That should even be part of the first questions that you answer. That should be part of the first question that you answer. So the bank reconciliation statement for the so this will be when there is an overdraft. When there is what? An overdraft. Overdraft means that look at the overdraft. Overdraft means that we know that debit balance. So if it's having a debit balance, if the balance brought down rather comes to the credit side, the balance brought down comes to the credit side. Why? Because the CD was at the debit side. If the CD is at the debit side and the BD comes to the credit side, this is called an overdraft. It means you have withdrawn excess of what you have in your account. So you are owing in your account overdraft. You have overdrawn your account. That means it's a negative balance. Something like it's a negative balance, right? Because the cash book is an asset and it's having a debit balance. So the BD always comes to the debit side. Now, you solve a question. Unfortunately, the BD is at the credit side and the CD, the difference was rather at the debit side. So this is telling you that it is an overdraft. It is an overdraft. It's an overdraft. And if it's an overdraft, then it means that the format would also change. So look at the format, how you start with the overdraft. Look how you start with it. The thing is not difficult. It's very simple to understand. It is so you don't know the general formula, this one formula, and then you'll be turning it upside down. Either the uncredited will come or unpresented will come. So let's start. So when it's an overdraft, what happens? Overdraft. This is the format. So let's say balance as per cash book, right? Balance as per cash book. Overdraft. Balance as per cash book. Let's see that. So this is an overdraft. OD, an overdraft. In the normal one, if there was no overdraft, what would have been the formula? What do we add? If there was no overdraft, what would we have added?
Unpresented checks.
Add unpresented checks.
Unpresented checks. So do you think it will still be unpresented checks? Do you think it will still be unpresented checks?
No.
In the normal one, when it is a normal balance, we add unpresented checks. Now it's the same balance as per cash book. OD. Do you think it will be unpresented checks?
No.
It will be add uncredited. So that if you know one, the others will easily come. Add uncredited checks. This is just something you shouldn't even worry yourself to chew. If I know one, the normal one is what? Balance as per cash book. Add unpresented checks. Deduct uncredited checks. If it's an overdraft here, I will balance as per cash book. Add uncredited, right? Add uncredited checks. So that's how the whole thing is. It's not difficult. Bank reconciliation, they're one of the cheapest topics in accounting. to add uncredited checks. If you're adding uncredited checks, what will come here? Is it wrong debit or wrong credit?
Wrong debit.
Wrong debit will come. Okay. So wrong debit is error. That's what? That is error. That what?
That is decrease our bank statement.
Error that decrease our bank statement. Okay. All right. So error that decrease our bank statement. Ayo. Then what do? We less
Uncredited check.
on present. Oh, we had already written the uncredited at the top.
Oh yeah.
So the second one is unpresented, right?
But
Yeah. Unpresented. So unpresented just let me even bring. Dennis, are you speaking?
oh no, I was confused as well.
Dennis, are you speaking?
Now, no sir.
Now you understand.
Yeah.
Is that Dennis?
Yes.
Okay. So do you understand now?
Yes sir.
Okay. And then if there is, so that will be wrong words, there will be wrong credits. So in fact, I believe you understand the format. Anything. No. So we also did that this. So what will be the balance? The balance will be called balance as per what? Balance as per. Hello, what will be the balance? What will be the name of the balance?
Overdraft.
Bank statement.
As per bank statement, you started with balance as per. The thing is cash book and bank statement too. The whole thing is cash book and bank statement. So if you don't see bank statement, you see cash book, right? Right. So this is the bank. So this is the whole format, right? Now let's start with our question. Someone should read for us as quickly as possible because I've taken my time to explain the format so that no matter the question that you see, you know that you are going to start with your format. You are going to start with your format. I'm going to start with what? The format. Start with what? The format. All right. So someone should quickly take us through the question.
Okay. Oh, then monochep.
Who is that?
Le boka start self placement though.
Kendra.
Placement though. Last start. Maybe.
Kendra, are you with us?
Yeah.
Is Kendra with us? Kendra, you are on your own. Kendra, you are not with us. You are on your own. Okay. So someone should read the question for us. Okay. Hello, someone should read the question. Okay. The bank statement of Lemon and Co. Limited for the period ended 31st May
Yeah, I'm
20
ready.
showed an overdraft of 1,310 naira. The company's cash book showed a debit balance of 3,154.25 naira. The following differences were discovered. 1. A check paid for rent on 6th May for 895 naira was recorded as 985 naira. A check was received from a customer less 5% cash discount for goods invoiced at 600 naira. The full invoice value was recorded in the cash book. Checks to the value of 7,504 naira paid into the bank were not credited. 2 checks for 1,054.25 and 1,085.75 paid to creditors had not been presented for payment. Bank charges amounting to 140.50 had not been recorded in the cash book. A standing order for 315 naira was paid by the bank but did not appear in the cash book. An amount of 4 naira for check books issued had not been recorded in the cash book. Interest on government bonds of 653.25 was paid directly to the bank. No record was made to the cash book. A check of 124 naira had been returned by the bank marked RD. This had not been recorded in the cash book. You are required to adjust the cash book and then prepare the bank reconciliation statement. So that is the requirement. That is the requirement. So now let's go through that. Let's go through this. So I said that the question can come in two forms, either in a table form and or in a statement form like what we are seeing. Either in a table form or in a statement form like we are seeing. The two of them, they are all easy to go about. They are all easy to go about. If it's in a statement form, you can easily see it. If it's in a table form, you can also see it. So let's start. So in accounting, we always start with the name of the business. So question 3, as we can see. Question 3, as we can see. So now, what is the name of the entity? The name of the entity is what?
Lemon and Co. Limited.
Lemon and Co. Limited. So Lemon and Co. Limited, you earn some ticks for this. I think a tick for this, yeah. Lemon and Co. Limited. Just for writing this, you earn a tick. So even if you don't know anything, you write it and then you go your way. So Lemon and Co. Limited. Alright, so we have to prepare the adjusted cash book. We have to prepare the adjusted cash book. If you still want to see the requirement, let me show you the requirement. So draw a revised cash book. Prepare a revised cash book. Prepare a bank reconciliation statement. Revised cash book is the same as adjusted cash book. Don't say I didn't teach you a revised cash book and the question asks for that. So it is a different thing. It is still the same thing. It is still the same thing. Right. So I start by preparing my revised cash book. My revised cash book. Revised cash book. revised cash book. Right. So now, revised cash book, we know cash book is an asset and it's having a debit balance. So any brought down from previous periods would be brought down the debit side to the debit side. So do we have any balance from the previous period? Do you have any balance from the previous period? Bank statement of Lemon for the period showed blah blah blah. Overdraft. The company's cash book showed a debit balance of 31542 54.25. So this is the balance from previous what period? Balance from previous period. Cash book is a debit. It's an asset, so it's having a debit balance. And the currency is Naira. So Naira. So balance brought down from the previous period, and that's 3 what? That's 315.25. 315.25. All right. So what is the next thing? Now we go through the individual transactions. So the following differences were discovered: that a balance of the bank statement did not agree with the cash book balance, right? So there was an overdraft, and the bank statement showed was an overdraft, and the overdraft amount is 1,310. If it is showing an overdraft, then this one must also show an overdraft of the same amount. Either we are all getting 315.25, or we are all getting 1,310. But now the statement is 1,310 and this one is 314. So that is the disagreement, and we have to do the reconciliation by doing the adjustments, by doing the corrections. So we take the individual items. A check paid for rent on 6th May for 895 Naira was recorded as what? 8985. So what type of error is this? This has it been overstated or understated?
Overstated.
Overstated. It's 895, but you are saying you made an error by recording 8985. So that is an overstatement. So if it has been overstated, what do you think will be the correction? What do you think will be the correction? We are supposed to write 8, is it 89? Check paid for 895. 895 was recorded as what?
985.
What is the difference? 985 minus 895. What do you have?
Mm. 90.
So the difference is 90, right? Now the next question that we need to ask ourselves: check paid. When we make payment, where do we record it at the cash book? Which side of the cash book do we record it? Is it a check paid or for rent? It means we the business, we are making payments for rent. So if we make payment, make payment of 895. Where do we record it? At the cash book. At which side of the cash book? At the credit side. So this is how the whole thing would be. If we should have recorded 895 here, right? I mean that's the right full entry.
Yeah.
Right? That's supposed to be the right thing, 895. But then we rather increase the amount. 985. Is it 985? Yeah, 985. Instead of writing 895, we wrote 985. So no. I think It's supposed to be 895, and you have made us. We've made a mistake by writing 8985. So what do you think we'll do? Do we use our pen to cancel this? To cancel this 985 and write 895? Do we do that? Should we do that by using our pen to cancel the 985 and write 895?
No.
Hello? What should we do?
Bring it to the.
We are supposed to generate the balance.
We are supposed to do what?
The difference.
We are supposed to do what?
We are supposed to debit the difference.
Debit the difference, exactly. So the difference is 90. So we have increased the credit side by 90. The credit side, we've increased it by 90. In accounting, I told you that this bar is like a minus sign. This thing is like a minus sign. So if you have to record 895 and you have recorded 985, why did you do that? You are supposed to cancel the 90 that is on it, the 90. What do? We just, so this is what you did. This is what you did. You wrote 985 instead of 895. You increase the amount 985. We don't just cancel this and write 895 again. No. So we are correcting it by debiting the difference, which is 90. Indirectly, this 90 is canceling the 90 from this amount. It is canceling the 90 from this amount, remaining 895. That is what it means. So you record it at the opposite side. If you want to decrease the amount, you record it at the opposite side. You don't cancel it and then write the correct amount, right? So you debit. If you debit, it means that the debit side is in canceling 90 from what? The credit side automatically. Indirectly, it is canceling. Right? The rightful entry to do in our revised cash book is to do what? Is to debit what?
The 90.
To debit the 90, yes. So we can see that overcast of the 90, overcast of 90, overcast 90. That is the correction. So in the old cash book, they made that error by recording 985, the credit side, in the old cash book. So what do we do in the new cash book? In the new cash book, we will just debit overcast. The overcast that has been made from the previous cash book, just debit it. So we are debiting it in the new cash book. Automatically, indirectly, 90 is cancelling the 90 that is in the 98, that is in the 985 from the previous cash book. That is simple to understand, and I believe you understand. All right. So what is our next transaction? What is our next transaction? A check was received from a customer, less 5% cash discount. Less 5% what? Cash discount for goods invoiced at 600 naira. At 600 naira. The full invoice value was recorded in the cash book. What? How can you do that? How can you do that? The check received from the customer, less 5% discount. Meaning you are getting 5% discount for the goods that the customer was purchased. The customer is getting 5% discount. But what did they do? The invoice amount was 600. The full invoice value was recorded in the cash. No, you have to deduct the discount. If someone is recording, is getting discount, it means the person will not pay the full amount. So 5% of 600, what do you think that will be? 5% of 600? What is 5% of 600? That is how much? That is how much?
30.
30, right? So that is even as 30. So why did they record the full amount? They should have recorded 5. Is it 570? Yes, 570. But they recorded the whole 600. Why do you think they would record the 600? Where do you think they record the 600? Where would they record the 600?
And the
Where would they
debit
record
side.
the 600? A check, they record it at the debit side.
The debit side. Yes.
Yes, they record it at the debit side. Why? Because they receive from the customer. And then we said the debit side is the receipt side. Is the receipt side when you receive, and the credit side is the payment side. So when they receive the 570, instead of them to write as 570, they wrote the 600. They didn't deduct the 30%, the 30 cedis discount. So how do we correct it? How do we correct this? How do we correct this?
To the credit side.
At the credit side, so they recorded 600 here. Why are you supposed to write 600 here? They're supposed to write 500, 570, but they wrote 600. So we cannot use our pen to cancel the 600. So the 600 was in the old cash book. So we will correct it by crediting the opposite side, 30. So indirectly, this 30 at the credit side is canceling 30 out of the 600. So we'll be remaining 570 indirectly, automatically. So I'm saying that, so that's why I said that maybe this thing can be as a minus sign. This thing is serving like a minus sign. Yeah, something just to help you understand better. So we will do our correction by doing what? Cash discount. So we say cash discount error. Cash discount error, right? Cash discount error. So that is how it's not difficult. It's not difficult. This should be one of the it's one of the easiest topics in accounting, just do account. And then if you understand the concept, that's why I took my time to explain the format to you. Alright, so let's take the other example. The more you solve questions, the more you'll be familiar with the entries, right? With the transactions. And you see that it will come exam time, you already know the thing already. You practice, you take another topic. I want you practice, you solve questions. If you don't understand, you share it with your friends or in the group, or to me, if I get the time, I will answer you. Then you move on to the next one, which is checks to be valued. Checks to the value of 7,504 paid into the bank were not credited. Were not what? Credited. Checks to the value paid to the bank were not what? Credited. What do you think is this? What do you think is this? On what?
Uncredited check.
Good. That is uncredited checks. Uncredited. So in your answer booklet, in your question paper, you write uncredited, small, uncredited. So that when you go and come, after you are done treating all the transactions, you will know that all the uncredited have indicated them, right? Indicated them. So that is what you do. So we leave that one because we are not preparing. We know that unpresented and uncredited for the bank reconciliation statement. But then we haven't gotten there, right? So we would quickly move on with the next transaction. 2 checks for 154.2 naira and 855.7 naira paid to the credited had not been what? Presented for payment. Had not been presented for what? Payment.
No, on the same level.
Is it down is what? Is anyone speaking? Alright, so now then we move on to the next one, which is bank charges. Bank charges amounting to had not been recorded in the cash book If it has not been recorded in a cash book, what do we do? If it has not been recorded, what do we do? If it hasn't been recorded in the previous cash, if it hasn't been recorded in the previous cash book, what do we do? It means we record it in the revised cash book, right? Right? We record it in the revised cash book. Yes. So now, recording it in the revised cash book, the question now is, where would it go? Bank charges. Where would the bank charges go?
The credit side.
The credit side. Why? Why the credit side?
Because we have to pay.
Because you have to pay the bank charges. When you have your money with the bank will definitely charge you. There's some charges. Yes, you definitely have to pay some charges, right? So that is the bank charges. And if the bank charges is a cost to us, which side will it be for us? Which side in the cash book will it be? It will definitely be at the credit side because we are paying the bank charges. The thing is sweet. This thing is easy like ABCD. How much is the bank charges? How much is the bank charges? 140.50. Easy like ABCD. So how would you tell me you won't get A in accounting? All right. So now move on to the next transaction. A standing order for 315 naira was paid by the bank but did not appear in the cash book. Standing order, and I believe I explained what a standing order is in class. I said a standing order is maybe we, the business, we instruct the bank to be making payments on our behalf. So let's say, you see, every month we pay electricity bills, those utility expenses, right? Like every water bill, utility, electricity bill. So we can liaise with our bank that, you know, something every month transfer money to ECG, right? Or the Ghana Water Company for us. We don't want to be going there up and down. Just transfer money into the account for us. So that's a standing order. Bank, I have given you an order that every month transfer an amount to ECG or Ghana Water Company. So that is a standing order. So it's an expense to us, right? An expense to us, right? So that will come to the, so it will still be at the credit side, standing order, because the bank will be deducting it from our balance in there or from our bank account. So what is the standing order amount? 315, right? So that's 315. 315. 315. 315. What else? Then we have what is the next? 315, right? 315. So now an amount of 4 naira for checkbooks issued had not been recorded in the cash book. An amount of 4 naira for checkbooks issued had not been recorded in the cash book. Is it a receipt or a payment item?
Payment.
A payment, right? Checkbook issued. So we requested for a checkbook from our bank. Bank, please give us check, and then they deducted 4 cedis from our bank account. So that is an expense to us, so payment. So checkbooks, that is 4 cedis. Bank reconciliation statement is too easy. It's too easy. 4 cedis. All right. And what else? Then interest on government bonds. Interest on government bonds of 653.25 was paid directly in the bank to the bank. Interest on government bonds was paid directly to the bank. No record was made in the cash book. So guys, will it come to the cash book or would you go to the bank statement? Reconciliation statement.
Go to the cash book.
Cash book, right?
Yes.
In the cash book, which side of the cash book will it go?
The debit side.
Why the debit side?
Because we are receiving.
We are receiving, right?
Yes.
So okay, so we are receiving. All right, good. Okay, so interest on government bonds. As a business, we can buy bonds from the government, right? So we can invest in bonds. If you invest in bonds, the government will be paying us interest on our bonds, and that interest that we are receiving is a receipt, so that will come to the debit side. And then the OTR, and you'll be the material say Fakoa and answer Fakoa. What they are saying? OTR didn't say, don't let someone tell you, send it here. You understand the general principle. So understand that this is the general. So me, I don't joke with principle like the basis. You and I can waste time on the basis for you to understand. So that when you take question, you know that that thing is not difficult like this. I don't just take a question and be solving. No. I make sure you understand the principles. So that when I take the question, it becomes easy for you, and then you go and try many questions. You go and try as many questions as possible. Learn. So many questions. You have group studies, so you can be meeting and then be solving many questions as possible, right? If you don't understand, if you think that the question no one can solve it before you bring it to me, but if you should send it to your individual groups before it comes to the top, not just straight from you to the top like that, because might not answer you within the time that you want. So know the one speaking. Abdul Salam is speaking. Salam, you are speaking. Okay. So now check of 124 had been returned by the bank marked RD. What's the meaning of RD? What's the meaning of RD? A check for 124 has been returned by the bank marked RD. This had not been recorded in the cash book. RD means what? Discount, right? So that is basically telling us it is a dishonored check. Dishonored check. So when dishonored check, where do you record dishonored check? When you give out so when you give checks to your what? To your suppliers or to your suppliers, your creditors. You record it at the credit side, right? You give out the checks to them, right? Now you give the checks to them, they went to the bank to cash out, and then they were rejected. Those checks were rejected because of because it is a post-dated check, causes of dishonored checks. I believe we talked about that. Post-dated check, when it is a stale check, when the date is wrong, the signature is not that of the specimen. If the signature is not the signature of the owner, then that can also lead to what? A dishonored check. So if they return The dishonored check was returned by the bank. Which side of the revised cash book will it go and why? So with this statement, where would it go and why? Anyone to assist? Hello, anyone to assist us?